Hello, everyone. Good morning to you all, and welcome to today's Forex Morning Mastery session as we prepare for the new week. I do hope we all had a wonderful weekend and trust you're doing very well and pumped up and ready for another week, which promises to be a fruitful one. For those of you who are seeing me for the first time this month, happy new month to you. Well, my own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. And of course, today is another important day, being the first trading day of the week, and of course, the first week of the new month. And we are going to be delving into our usual financial instruments, which includes the USOILSPOT, the USDJPY, and of course, my favorite, the XAUUSD. In fact, I have some interesting and simple trading setup I'm excited to share with you, which will be guiding my trading decisions ahead of today's session. So if you're a fan of any of these assets, you want to stay tuned in, as you do not want to miss out on the ideas that we are going to be deliberating on today. For those of you who are joining me for the first time, you're highly welcome on board. Sorry, the session started a little bit later than expected. In fact, we had some technical issues with the YouTube stream and we had to change the stream. I had to re-update you guys on the Telegram platform before we can actually come on live. But the good news is that we are live, and of course, we are going to be preparing ourselves for this week. So the Forex Morning Mastery is an educational avenue where we come together to understand the behavioral patterns of market participants through the lens of price action and fundamentals analysis. We do this 3 times in a week: Mondays, Wednesdays, and of course Fridays. And during the course of the session, we intend to look at the structures on the chart, try to dissect what is going on behind the scenes, and of course use that to identify strategic areas on the chart where we can capitalize on intending price movement. So that is basically what we do here 3 times in a week, and I'm very excited to have you guys here with me today. And of course, feel free to engage in the comment section if you have any questions, if you have anything whatsoever on your mind you want to ask. It could be as regards to the analysis, it could be as regards to the financial market, what have you, or you want to question my narrative. It's all good. Drop them in the comment section, and I'm here and willing to answer them accordingly. So with that said, here we will be diving right into the business. And of course, the first thing we normally do is to keep tabs with the market situation around the US dollar. And for those who are joining me for the first time, well, the reason why we first of all take on the US dollar market dynamic is basically because all the asset we are monitoring has a lot to do with the US dollar. So there is no way you want to be trading the Japanese yen, the US crude oil, and of course the gold commodity, all of which are the US dollar denominated instruments, without really having an insight into what is really going on in that particular market. And from the look of things right now, the dollar is in a tug of war. Of course, you can see what is on your screen right now. This is the DXY chart, which gives us an overview of how the US dollar has been performing. And from what you can see on the chart, taking into account the character of price action in the last 3 to 4 weeks. And for those of you who were with me last week, remember we had this descending channel which was finally broken out of last week thanks to robust US economic data. We saw price broke out of that area significantly, and then we saw the $99 and the $98 area become a demand zone for the second half of last week. And of course, price action is back into that area. And when price came back last week Friday, we saw that throughout the whole of last week Friday, price was technically consolidating within that zone between the $99 and the $98.65 area to emphasize the prevailing uncertainty at that point. So that is why I'm saying the dollar is currently in a tug of war. And on one hand, we've got weak US data. On Friday last week, the NFP came in with disappointing figures, way below what market participants had expected. So we've got a weak US data on Friday, and we also have political heat pointing towards rate cut expectation as a result of this. And this dragged the dollar down on Friday, as you can see, with this engulfing bearish candle back into that particular structure. And then on the other hand, we've got geopolitical tensions and a small rebound in the US Treasury bond yield, giving a short-term support for the dollar. So in this market right now, we need to be as flexible and aware as possible, not to frustrate, but really understand what is really driving the sentiment in this market. And from last week, like I was saying, the NFP came in at 73,000 jobs, way below the expected 110,000. Then we also saw unemployment ticked up a little bit by 4.2% as against the 4.1% of the previous month, and participation also dropped. Now, this flipped the market sentiment, really. Traders are now pricing in a strong chance of Fed rate cut in September. And of course, we know what that means. When rate cut expectation is back in the picture, it usually pressures the US dollar, and this led to that momentum we saw. And the question now is, will this continue to the downside? Of course, we saw price broke out of the resistance line of the descending channel, and if we extend the resistance line, which I will do right now, let me extend that further. So if we extend the resistance line, you will see that there is a possibility of price retracing back into that structure in an attempt to continue the uptrend move. Will that be the case, or will this area be the platform to send the dollar continuing to the upside? So we're really at a critical juncture at this particular point. Now, to add more salt to injury, we learned last week that Trump deployed 2 nuclear submarines near Russia after tension escalated with the former Russian leader. Now, this brings risk-off sentiment, which usually will support the US dollar as a safe haven. Mind my word, as a safe haven. But the political noise at home is now blurring that edge at the moment. We saw Trump sacked, or let me say, is it not sacked, the BLS, the Bureau for Labor Statistics. It didn't extend the tenure of the chairman, which was a red flag that maybe the government is interfering with this department. And as a result of that, it also brings some political noise within the US economy. And the US Treasury bond yield is also bouncing slightly when I checked this morning after last week's drop, which could also favor the US dollar, because we all know how the US Treasury bond yield is directly proportional to the US dollar. So if the US Treasury bond yield drops, we expect that the US dollar will drop, and if it rises, there is a high chance that the that the US dollar too will rise. So these are things that we need to take into account to really understand what is driving the sentiment in that particular market. So now with this information we have, let's go into the chart. Let's go into the asset we are monitoring for this week to see how this is influencing those assets. Is it time for us to start buying, or are we going to start considering selling, or maintain patience and wait for structural details to mature? And if we consider the fact that today is the first trading day of the new month, or no, let me say the first week of the new month. New months usually bring in a little bit of indecisiveness in the market, where major key players want to wait to understand what is likely going to happen. Structures are still forming at the moment, and it could take a while before we see any spike at all, except if we hear of any sudden maybe tariff talks or global uncertainty that could spike price at this point. Now let's go into the first asset on our watch list. Let's see what's going on there. And the first one here is the USOILSPOT. And in the last couple of weeks, I have been contemplating not to trade the USOILSPOT. Remember last week I was saying that I wouldn't be trading this asset due to the indecisive in that market. But as soon as we saw a familiar structure on the 1 hour time frame, we capitalized on it, and it gave us a massive move. Remember, we were part of this old bullish move all the way into, I think it was 68 as at last week. That was about 300 pips thereabout before this bearish move started on Thursday. So this week the same feeling is also engulfing me right now, as I'm not willing to jump into this market due to the uncertainty I am still seeing here. If you look at the structure on the 4 hours time frame, so this is the 4 hours time frame of the US crude oil market, and you will see that in the last 7 weeks, that's since the early days of June. So we are talking about June, July. So we are talking about, I think it's over 8 weeks now, about 9 to 10 weeks of historical data. You will see that price remained confined within a range bound structure, which I emphasized last week. In fact, last week the resistance line was at the $68 area, but for this week we have it at the $70 area, so it has extended a little bit. Now, one thing I noticed within this range bound structure is the fact that the area around the $65 and the $64 level had been a robust demand zone, right? We can see all the bullish momentum in the last 8 weeks started from this particular area. Sellers were unable to break through, and anytime price comes in here, what did we see? Price climbs up. The same thing happened here in July. Price climbed up, though not that much, and we saw what happened last week as well. Price climbed up from that particular area, making it a robust demand zone. So it simply tells us that that area between the $65 and the $64 zone has a strong memory for buying power. And from what happened during the second half of last week, you can see price is gradually retracing back into that structure. Now, one interesting thing about this whole thing is that you could see this descending trend line, which was finally broken last week. And from a theoretical standpoint, we expect that when price breaks out of a key structure like this, it is likely going to come back, retest the structure, which interestingly lines up with the demand zone we talked about earlier to incite another wave of bullish momentum. But if we see a situation where that trend line and that demand zone get broken to the downside, it may likely incite a massive sell-off. So going into this week, the question on my mind is, will this how far, let me put it that way, will this retracement phase go? Is it going to get into the structure to retest it before the uptrend scenario happen? Will it start the momentum from here? Or is it going to break down the demand zone to inside a massive sell-off? So you agree with me that we are at a critical juncture. And for us to better understand what is likely going to happen, we need to understand what is going on behind the scenes. And from what we saw during the Asian session today, the price of crude oil is bouncing back. It's showing signs of recovery because the market is now betting on more Fed rate cuts after last week's weak NFP data. That usually gives oil a boost. You know how related they are. If the dollar shows signs of weakness, demand for crude oil definitely will increase. Why? Because crude oil becomes cheaper for other currency assets to buy. Now, traders are also still cautious because OPEC Plus is planning to pump more oil into the market. I told you about this last month that they are looking to pump more oil starting from August, about 547,000 barrels per day in August. Now they've extended it to September, aiming to reclaim lost market share. And of course, we know what that means. More supply in the market definitely equals to potential ceiling for price rally. So if we take this into account, tendencies of sellers coming in is still also there. Then if we also go behind the scenes, China, from new reports are saying that China is ramping up long-term output in Iraq. So what does that mean? China is silently expanding in Iraq. Smaller Chinese oil firms are pouring in billions into Iraq, aiming to double production by 2030. So this equates to long-term supply growth, and this is obviously a bearish overhang if demand slows down. And so you agree. And if we also look at the Russian supply, which is also in limbo due to new US sanctions and Trump's fresh tariff threats as well, we are within a tug of war between bullish short-term demand hopes and bearish medium-term supply pressure. Now, what is going on and how is the market digesting all of this information? Now, to have an insight into this, we will scale down into our execution time frame. That is the 1 hour time frame to see how market participants are doing as at the beginning of this week. Now, when I scaled down into the 1 hour time frame, this was what I was able to come up with. So I will zoom in. So let's see things more clearly here. Now, for the first 1, 2, 3, 4, 5, 6, 7, 8 hours, we saw that price was technically within the $66.50 level and the $65.97 level to emphasize the prevailing uncertainty during that time frame. And you know how we use our range bound structure. We wait for price to either break out the resistance line, give us an opportunity to buy, or break down the support line for selling ideas. We saw price broke out the structure during the Asian session this morning. Price tested the $67 area and boom, immediately it tested the 67. We saw this massive engulfing bearish candle bringing price back into the support line. In fact, we saw a little bit of breakdown of that particular structure. So with a range bound structure established at this point, how are we positioning ourselves for the next move? So, well, for me, I wasn't part of this trade. I was not on my chart when the breakout of the resistance line happened. I only was around when this whole breakdown, this engulfing bearish candle came in. Now, the question here is, how do we position for next? Are we selling since we saw a breakdown happen from here? Well, if you would ask me, taking into account the long-term bearish momentum that started on Wednesday during the second half of last week, we might be feeling that sellers are still present in the market, right? And if we consider the OPEC's production boost incoming, I'm talking about China's silent expansion in Iraq, then let alone, don't forget the geopolitical tensions, that is Trump threatening 100% secondary tariffs on buyers of Russian oil by August 8th. This is adding uncertainty, but also potentially putting shock into the market. So the path of least resistance to me right now still looks a little bit bearish. So if we want to consider selling, we want to be looking out for selling ideas below that $65.97 level. And in fact, before I want to jump, I want to be looking out for confirmations. Now let's scale down into the 15 minutes time frame. Let's look at what price action is doing around that area. Do we have a convincing structure to mark out? I think we do. We have a retest of the structure, so I will place a sell right away. I think I can afford to sell the US crude oil based on what I'm seeing right now. So let me place a sell right below the support line. Let's risk it and see how that is going to play out. So I just placed a sell stop order below the $65.97 level, and then let's put stop losses maybe somewhere around the $66.40 level, just to give enough breathing space for price action to move around. Sorry, I just made the wrong pending order. Sorry. So sell and then place my stop loss around the $66.40 level, right? And let's see how far that momentum is going to go. Now, where will my TP target be? I doubt if price will move further than that support zone we identified around the $64 area. And between here and that 64, we are talking about 190 pips. So let me just put it at 65. I don't want to be too aggressive at this point, or too ambitious. So let me put it at $65 level. And if price shows some strong momentum, I could extend my TP accordingly. So in the meantime, I just placed a sell on the US crude oil. Let's see how far that is going to go. Okay. And I will update us accordingly if I see anything new that comes up. So we are on the sell right now on the US crude oil. If you are willing to join me on this journey, place your sell right away, and let's see how far this is going to go. Now, to consider buying, well, we'll need price to climb back above the resistance line one more time, maybe do some couple of retest of structure before I really think that buyers have come to stay here. But if we consider what went on during the later part of last week and the breakdown of the support line, I'm leaning towards a bearish move. Let's see what happens. And please note that as soon as price move about 20 pips in our favor, we move stop losses to secure that sell position. All right, so there you have it, my personal take on the US crude oil for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I guess we are all on the same page, right? Ensure we mark out the structures accordingly as we have illustrated here. Let's see how the market will play out from this moment, and if anything new comes up, I will definitely update us on my Telegram platform. So we are currently in a loss on the US crude oil. Remember to keep enough to this move around. Stop loss is at $66.40 level and TP at 65. Let's see what is going to happen. So I wish us all the best of luck. I wish us all the best of luck on this one. So moving on to the next asset on our watch list. So the next asset we are looking at is the USDJPY. That's the US dollar against the Japanese yen. And right now the USDJPY is stuck between, I'll say, two tired fighters at the moment. The yen is weak because the Bank of Japan is still dragging its feet and dealing with domestic politics, while the dollar is losing momentum because the US NFP report disappointed market expectations, and traders are betting heavily right now on rate cuts coming as early as September. So we've got a battle between hesitant Bank of Japan and a softening Fed at the moment. So that is why price is hovering around that 147.5 area since Friday's trading session. And if we take a look at this from a technical standpoint, I didn't go really far on this one. I only took into account the character of price action in the last 4 to 5 weeks, and this was what I was able to come up with. First of all, we have something like a support line. As you can see, ever since price climbed above the 145.750, that was at the beginning of July, sellers have been finding it difficult to break through. And within 9th of July and of course 29th of July, that is 3 weeks, the last 3 weeks of July, though price was finding lower highs, as you will see that sellers were trying to push price down, but they were unable to break down the support line in the process. And as this happened, buyers gained some liquidity, leading to a significant breakout of that descending trend line, as we saw last week, price hitting the 151.00 area. Of course, we were also lucky to capitalize on this opportunity last week. Now, with the way things are going right now, you see what happened at the end of last week. Price came back to retest that descending trend line, and since price came back into structure, we can see price has been doing what looks like a consolidation since the beginning of this week, making it a crucial juncture going into today's trading session. Now, the question here is, will it be a platform that will send price continuing the uptrend scenario, or are we going to see price drop below this area, maybe back into the support line, if not breaking it to the downside? Now, we are at a critical juncture here, and to help me navigate this market at this point, I had my key level for this week at the 147.500 area. You know, my key levels are always in pink color, and you know what that does to us. It helps us navigate this important confluence. If price remains above the key level, we look out for structures that support buying ideas, but if price drop below the key level, we definitely want to be looking out for selling ideas. So this is basically what this is doing for us. Then another thing about the key level here is If you go to as far back as second week of July, you can see how that level had played a significant role in determining the direction of price action. At some point, it was a selling niche, as you can see here. Then it became a buying niche at some point. Price came back to retest mid-July. We saw consolidation, then turned out to be a supply zone. And since price broke out above the structure during the last week of July, price had maintained momentum above that area. The same thing happened here. Since the week began, we can see buy pressure persist above that structure. And this led me to buy the USDJPY this morning. If you look at the bottom of your screen, you'll see that I do have a buy position running on the USDJPY, though it's still in a loss right now, but I'm hopeful that the momentum may continue, considering the fact that price remains above the key level at the 147.5, and of course the descending trend line we marked out here. Now, besides that, the fundamental factors supporting the USDJPY are quite large. We have multiple of them. For instance, we have the Japanese yen. The sentiment around the yen is very, very weak at the moment due to the Bank of Japan still taking its time with rate hikes, and political tensions at home is also delaying clear decisions. So there is no urgency from the Bank of Japan to hike interest rates, so that reduces the strength in the value of the Japanese yen. Then if we also look at the revised inflation forecast from Japan, hinting that it might raise rates by the year end, so that's still far away, as the governor of the Bank of Japan, that is Ueda, downplayed inflation risk and basically said we will see what will happen. So traders aren't buying that hawkish stock at the moment. So for me, I still strongly think that the path of least resistance for the USDJPY remains to the upside. Now, the only setback that the US dollar is having right now is the weak US job report we saw on Friday. That is the NFP coming in at a low figure of 73,000 jobs, as against the expected 110,000. And for this is the only thing that is not too good for the US dollar at this moment, as this has increased the expectations of rate cuts, which overall, you know what that means. It causes a decline in the value of the dollar. But with that said here, price is still consolidating. In fact, we'll see things more clearly on our execution time frame, that is the 1 hour time frame. So if you go to the 1 hour time frame, this is what we have. Price is still confined within a range bound structure, just around that key level we marked out at the 147.500 area, as you can see here. And you know how we use our range bound structure. We want to be patient enough to wait for price to either break out the resistance line to give us buying opportunities, or break down the support line to give us selling opportunities. So I bought above the resistance line. I'm still hopeful that price will continue to the upside, considering the fact that price still remains above both the key level and that descending trend line. Stop losses are maybe below the trend line, and if you have a bigger account, you can make your stop loss as wide as 100 pips or 90 pips thereabout, capturing the lowest point of the support line here. But if you are looking at small stop losses, you can be looking at 55 pips of stop loss right below the descending trend line. So that is the only condition for me to buy. I strongly think that price was going to climb above the 147.910. But if that is not the case, you know the market, you know how the market is, we can't really predict what is going to happen. All we're just doing is to use the edge we have, try to understand what market participants are thinking, using the fundamental factors, reading that into the chart to strategically position ourselves for the next move. And you know how we do it in this community. We try to stay grounded in our approach while we capturing the potentials of the buyers. We also look out for possibilities that sellers can also come in, and if they do come in, what are the chances? If the market leans towards Fed expectation, which I doubt, considering the uncertainty in the Japanese economy at the moment due to sluggishness in the Bank of Japan to increase interest rate, and of course the political uncertainty there. If market chooses to lean towards that direction, well, the only condition that will make me sell is for price to break down the support line of this range bound structure, and I would love to see a confirmation, like a retest of structure. I want to see signs that buyers are finding it difficult to break back above that descending trend line before jumping into a sell. So we are not selling except price finds structure below the 147.050 and that descending trend line. So please, let's take note of this, mark out the structures accordingly, and let's see how the market will play out. For those who are yet to buy, if you want to join me on this bullish expectations, you want to be placing a buy stop order above the resistance line at the 147.910 area. So that is my simple view on the US crude oil, the USDJPY for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds. Let's see if there are any questions before we jump into the final assets on our watch list for today. Stay tuned in, guys. All right. So I guess we are all on the same page. No questions means we are all good. And with that said, let's jump right into the final asset, the most interesting one for me. In fact, I love trading the gold commodity. So moving on to the next asset on our watch list, my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And of course, I shared my views on this particular asset during the weekend. For those of you who have not watched it, I encourage you to go ahead and watch that video where I went on to explain the driving factor of the price of gold last week. We saw a massive decline in the price of gold during the first half of the week due to a robust US economy. We saw a GDP of 3% last week. We saw the Fed maintain interest rate. We saw initial jobless claim count showing that the labor sector was doing very well, and not until Friday we saw a poor performance from the NFP, and of course the President Trump announced out of the blues new tariffs, which sent some shockwaves into the market, and everyone rallied back into the gold market, resulting in that massive engulfing bullish candle we saw on Friday. And of course, we were lucky enough to capitalize on that bullish opportunity. So please watch that video to have clarity into how we got to this point. Now, this is the 1 hour time frame. This is our execution time frame. And for those of you who are with me on both my trading view and Telegram platform, you must have seen this structural detail. And this structure was captured after taking into account the character of price action since the beginning of this week. And you can see price has been within a range bound that is between the 3,345 and the 3,369. So gold is holding near last week's high, even though the dollar is trying to recover. Now, the real story here is the weak US job report. Traders are betting big on Fed rate cut in September. And if we had political tension in the US, some war drama with Russia, and a dip in stock market, and you've got enough safe haven fuel to keep the gold supported. And if it is pausing for a breather today, I believe it's going to be more of a range bound for a while before price action finally finds a trajectory. Now, political drama in the US. I forgot to mention earlier that, okay, I think I did mention the head of BLS his tenure not being extended after the bad job sprint. And of course, we saw the Fed Governor Kugler resigned last week. I did mention that Kugler had already resigned already. So we're not going to be hearing speeches from Kugler anymore. And this resignation is stirring doubt about the Fed's independence. And with this whole scenario, the US dollar may not likely have a chance maybe for the first half of this week. And from the structure we have here on the 1 hour time frame, it reflects how the market are dissecting this information. We have the geopolitical escalation. Trump deployed nuclear submarines near Russia after threats from Medvedev, that's the former president of Russia. So this is tension, and you know what happens when there is tension, when there is global uncertainty. Everyone wants to jump in on the gold. Now, with the way things are going right now, I still believe that gold still has a lot of room to the upside. And with that said here, with the range bound structure and of course an ascending trend line, we definitely want to be looking out for buying ideas. Price remains above the ascending trend line. So I had to buy before that breakout of the resistance line. I told us in my update this morning that I will be buying the breakout of the resistance line. But when I saw buy pressure here around the trend line and the inability of sellers to break down the trend line in the last 4 to 5 hours, it became evident to me that we may be at the verge of price rising from here. So I quickly bought there. The price had moved considerably well for some time, but price is back again into the structure. So I'm roughly in profit, but I'm still hoping that this trend line will hold the bullish momentum, leading to price breaking out of the resistance line and for the breaking out of the 3,380 to continue that uptrend move. So I remain bullish on the gold commodity. Even if price drops below the trend line, I still want to believe that there is still room for buyers to go to the upside. Now, the only condition that will make me consider selling the gold commodity is for the support line of that range bound at the 3,345 to get broken to the downside. Only when that happens will I start considering selling the gold commodity. So that is what I'm looking at today on the gold. A very simple trading setup. We have two structures on the 1 hour time frame, an ascending trend line and of course a range bound structure, which is giving us a framework to guide whatever decisions we are making today. So we only look out for buying ideas as long as price remains above the ascending trend line, and we look out for selling opportunities only when the support line of that range bound structure is broken to the downside. So that is basically my view on the gold commodity for at least the first half of this week. I hope I made myself very clear. If not, let me know in the comment section if you have any questions or you need some clarifications. I'm here and willing to be of help in that regard. So I'll take some seconds off, like 5-10 seconds. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. So in the absence of none, I guess we have come to the end of today's Forex Morning Mastery. It has been a great moment for us all. And today we were able to run through the 3 instruments on my watch list, my plans for this week on the USOILSPOT, the USDJPY, and of course the XAUUSD. We have some interesting setups to guide our decisions today. Simple setups that helps us to have an insight into how market participants are thinking. And I do hope we all marked out the structures accordingly. If you have done so, well done to you. So let's be patient and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. For those of you who join me for the first time, I do hope you are able to gain one or two things from this session. If you did, why not join our subsequent editions? The more time you spend here, the better you get to comprehend my analytical approach. So I look forward to seeing you guys again on Wednesday, same time, 8:30 a.m. UTC. That's 9:30 a.m. West African time, as we come here again to review how well these assets have done and of course prepare ourselves for the second half of the week. So till then, I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.